Good morning, Bookmap community. Thank you all so much for having me. My name is Charles. I run a community called, Morning Bookmap community. Thank you all so much for... Sorry for that echo. I run a community called Piratetraders. We're focused on the ES, the NQ, and how it moves through the two-way auction process. I use a couple of different pieces of software to help me understand what the market is doing on a daily basis. One is market profile software. That is the chart that you see on the left side of the screen. That basically just shows me where the market spends the most time and where it brings in the most volume, which of course helps me understand both what levels the market is doing business in, where I might think about doing business, and also bigger picture, just kind of what's going on with the market. Then over here on the right, I use the Bookmap software. The Bookmap is an Orderflow software, and the main reason that I'm using it is for basically telling what's happening with the liquidity throughout the market's moves throughout the day. So what we've got in the background here, if you look at all these kind of like little random colors that are popping up, that is what is called the heat map. The heat map is basically showing you the current order book, which is this section over here. So that's showing you where the orders are sitting in the order book right now. Obviously, that is shorts above price and longs below price. But then it also allows you to see throughout the day how that liquidity is changing. When the market starts to move up, did they disappear liquidity? Did they bring in new liquidity? What happened? And by understanding how they're using liquidity as a tool to get market participants to do business, you can have an edge in understanding what is likely to come next. And then last of all, you may see me click over and take a look at this screen in the background, which is showing what we call the market internals. And this just basically gives us an under the hood look at the market. This tells us on the exchange level, are people really buying and selling the actual shares, which will of course affect the price of the futures. Okay, so first thing in the morning, I don't really need any of this right away because I like to start my day by zooming out and giving me some perspective on what is happening bigger picture with the market, what Jim Dalton calls a top-down approach. If you get too obsessed day by day, watching the way the market moves, you can kind of lose track of what's happening bigger picture, which absolutely has an effect on what's happening day to day. So let's go ahead and zoom out. We're going to go all the way to the monthly chart. Okay, so what is the monthly chart telling us? Well, each candle represents 1 month's time and the business that the market did in that month. So we can see over a period of years what has been happening with the market. We can see that back in 2021, the market made an all-time high. It had a lot of momentum coming out of those, COVID lows. It had a lot of momentum to the upside, but that momentum came to an end and the market rolled over on the monthly time frame. It pulled back, giving stronger hand buyers, stronger hand participants, again on the monthly time frame, a chance to do business, and then it turned around and it went right back up to all-time highs. Well, where are we now? Above those previous all-time highs. So that is bullish to see. If the market needed to balance more on a yearly basis, we should have sort of run out of steam at those all-time highs and started to pull back in. We did not. So that is bullish to see on a monthly time frame. We also notice on a monthly time frame that the market is one time framing higher. That means we are making higher highs and higher lows each month. As long as the market continues to one time frame higher, it will continue to go higher. And so another thing we are watching is the monthly lows to see when do we break those. So for now, everything looks bullish on the monthly. Let's zoom in and take a look at the weekly. So we can get a little bit more information by zooming in a little bit and seeing, okay, yeah, we came back to the previous all-time highs, but how did we do it? How exactly did we get up here to the previous all-time highs? Well, the market spent some time balancing. Okay, it liquidated. That liquidation brought in strong hand buyers that began to push the market back up. That move back up caused short covering and FOMO buying. Okay? The fact that the market just went week after week after week after week after week after week after week up in a straight line straight to those previous all-time highs tells us that this was more short covering and FOMO buying in here and less necessarily strong hand buying. Okay? Well, that's fine. So that's the first thing that jumps out at me. Then I see we spent a little bit of time. It was only a few weeks, but we spent a little bit of time balancing right here around those previous all-time highs. And then we began the momentum once again. So same thing as the monthly. This is bullish to see. Why? Because we are one time framing on a weekly basis. We are making higher lows each week. So an important level to watch is last week's weekly low. If we get below last week's weekly low, the momentum on the weekly time frame is over, and we're likely to need to do some balancing. Okay? So that's the next thing I'm watching, is the weekly low from last week. And then we'll zoom in a little bit more, and we'll take a look at the daily. So again, we're now looking at the same information, but we're getting a lot more of an understanding from looking at it. Okay? So what are we seeing here? Well, the market spent some time balancing. That's what we had, this balance area right here. It spent roughly a couple weeks in there balancing up and down, trying to figure out, does the market want to go higher or does the market want to go lower? And it chose to go higher. So again, bullish to see. What else am I noticing? Well, two things are jumping out at me. One is we are kind of one-time framing, not really technically one-time framing, but kind of one-time framing to the upside. So that is a sign of momentum. But really what's happening is balance, okay? Because this is basically on the daily what we would call a channel, where the market just kind of, the same way this is balance, right? The market tests a high, it tests a low, it tests a high, it tests a low, and then it breaks higher. This channel, as tight as it might be, is basically the same thing. The market is testing the high, testing the low, testing the high, testing the low, testing the high, testing the low. And as of now this morning, it is still holding there. Okay? That is important information for me to see. That as long as we hold this trend line on the lows from last week, that momentum can continue to test the trend line at the highs. Also bullish to see. Okay, great. So pretty much across the boards, everything looks bullish, but it does look like it needs to roll over at some point. So now let's zoom in and we'll take a look at that same period of time, that channel that the market has been in, and we'll look at it on the market profile chart to try to get a better understanding of exactly what has been happening. Well, on the market profile chart, we get some information here. We can see first and foremost, this move up on the 19th was very, very weak. What we mean by that is it was traders forced to make a move. It was short covering and FOMO buying on a day time frame. That day, people were forced to cover shorts and were FOMOing into longs. And so that created that momentum to the upside. Okay. We left behind single prints. When you leave behind single prints, it is first a sign that you have momentum and that it can keep going, but it is also the market telling you at some point it wants to come back in here and backfill those single prints. At some point, there is somebody who wants to go long here, and since the market is always looking for liquidity, it may need to come down there to find it. Okay? Well, what happened from there? Well, the market was able to keep that momentum going the next day, and the market pushed higher. Now I'm making note of this area right here around the 48.80 area. Why? Because of all the time and volume we brought in the overnight after this big move, all the time and volume we brought in the next day, even though on a daily we still had momentum, we were really balancing. Another night of balance in the same area, another day of balance in the same area, and this day gave us what we call an inside day. So the market was completely inside the previous day's range. So that's basically the market saying we haven't run out of momentum yet, right? We can still keep going, but it's getting close. The buyers are having to work really, really hard to keep this momentum going. Okay, great. So that momentum continued the next day, another higher high, another higher low, and we started to do business up in here, as we can see, spending lots of time and bringing in lots of volume. So then the market that overnight came back down, tested that breakout, tested that area, and built all this time, all this volume. Okay? So what is this telling me? It is telling me that the market doesn't need to pull back down with price. It doesn't need to backfill these single prints, not yet, because every time it starts to run out of momentum, it just grinds and fights and pushes its way back up. It grinds and fights and pushes its way back up. Those buyers refuse to let this market go down. They are defending it with all their might. Okay, but what else am I seeing? Well, we are spending all our time and bringing in all our volume the last couple days of last week in the same area right here. So this is the market playing tug of war. The market is desperately playing tug of war right now, and it's going to end one of two ways. It is either going to end with the market continuing to the upside, more momentum, more short covering, so on and so forth, or it is going to end with a pullback in price, needing to pull back down and backfill some of this weakness that we left behind. Okay, so I can't tell you how long we're going to continue to grind in this range. I can't tell you that. But I can tell you whenever we break out what comes next, and that is a big move with price. Okay, so now let's zoom in even more and let's start to ask the question, okay, Charles, how do we know which is happening? You know, this week, as we watch the market move, what are the signals the market could give us for what's coming next? Well, the first thing I'm watching is Friday's low. Okay, that low is right here around 49.07. That was an extremely weak low. I don't want to go into detail explaining how we define weak and why it's weak, but just trust me, that low is extremely weak. It needs to be tested again. The market needs to poke down there and just see if there's anybody that wants to do business below that level. Okay, so if it can hold that level, if the market stays above 49.07, there's no reason for it to go down, and it can just keep going up. It will shock you how far they can push it. But if it does come down there and poke down below that level, that changes everything, because now we've got a lower high on the daily. And that means the market, that is the signal that all the participants of the market would use to say this market needs to pull back with price. So the first thing I'm watching is Friday's low. As long as the market stays above it, I am bullish. Plain and simple. I think we're going to keep going up as long as we can stay above Friday's low. However, if we get to Friday's low and we poke below it, there is potential for a big move to the downside. So what I'm going to be watching for is what happens when we get there. Do we just do what the overnight did? So over the weekend, they went below the low, but then what happened? Boop, boop, they came right back up. That's what we call a look below and fail. If that happens, if we get to Friday's low today and we poke below and we turn around and come right back up, I will be bullish as can be. Why? Because if the sellers want to take control of the market, if they want to take the market lower, they will need to turn Friday's low into resistance. They will need to poke below Friday's low and then not be able to get back up into Friday's range. So if they do, they've lost and the buyers are still in control and the market will keep going higher. If they're able to hold that resistance, well, then I'm looking for that larger pullback in price. Okay, so at that point, I want to be a seller, selling resistance and buying back support. Now, there's a lot of caution that needs to be taken because of the amount of time and volume we've spent grinding around these lows in here, right? This is a lot of support. So I'm not saying we'll look below yesterday's low, find some resistance, and then drop like a brick. I do not believe that is what will happen. It could, but I don't think it's what will happen. Likely, it will be a very slow grind to get through this support before we get that sort of liquidation that takes the market much lower. So I'm looking for resistance. I will be shorting if we get it, but I will not be falling in love with that short because I will be assuming it's going to be quite a grind to get lower. Okay? So now let's talk about to the upside. Well, we just talked about how on the monthly basis, on the weekly basis, on the daily basis, we've got momentum. We've got bullishness all over the place. There is no reason in the world this thing can't keep going higher this week. Okay? So if that's going to happen, what am I looking for? Well, step number one will be the market has to get above the overnight high from the weekend. That is 49.22. If the market is able to get above that overnight high and then turn that into support, I would be as bullish as a little boy can be, because that would tell me the market still has momentum. They want to make new all-time highs and they want to keep this thing going. So inside this overnight range, below the overnight high and above yesterday's low, so in between 49.22 and 49.07, I have no interest in doing business. I have no interest in trying to go long or short in here. This is what I call a chop zone. This is an area where the market will be extremely tricky to understand. It'll go up, it'll go down, it'll be totally random. None of it will make any sense. And so any sort of going long or going short in there is just a gamble. It's a guess. You have no edge. You have no certainty that the market is likely to do anything. It could just keep chopping. It could break higher. It could break lower. And so I don't gamble in those types of areas. I just don't do business in chop zones because it's too difficult. So inside that chop zone, I'll be watching the market. I'll be watching what it does in support levels. Does it hold? I'll be watching what it does in resistance levels. Does it get smacked back down? I'll be watching how it handles the halfback, which we'll discuss once the market opens. That's all I can do inside the chop zone, is just watch the way the market moves and hope that that gives me an insight about what comes next. But you better believe if we get below yesterday's low, Friday's low, and get some selling down there, I'm going to be a bear real quick. And if we can get above that overnight high and get some buying up there, I'm going to be a bull real quick. But I don't diddle in the middle. And that's the way it's going to be. So we are opening in a chop zone. I suspect it's going to be a very boring morning, perhaps even a very boring couple of days until Wednesday. So no reason to feel FOMO this morning, guys. No reason to rush into trades. Let the market grind. Let it chop. Let it chew up all those short-term traders that just have to get in a trade. Oh, it's Monday morning. I got to be in a trade. I've been waiting all weekend. You don't have to be with them. Let them get chewed up. Let them get whipsawed. And we'll wait and see who is going to win on the breakout. Who is going to be the first participants to make the next big move. And we join that bigger move. Okay? We've got 10 minutes until the market opens. So if you have any questions, please let me know in the chat. I'm talking about a chop zone, baby. It's chopping. They're going to chew up everyone today. I do suspect it's going to be a very choppy morning. Good morning to Peter. Welcome. Will in the house. David G is here. The Demo Trader. Welcome. And thank you so much. Sevloskv. Sorry, bro. I just literally murdered that name. I am so sorry. We'll just call you Novo. Good morning to you. Welcome. Bust a Move in the house. Bookmap channel in the house. What's up, everyone? Dylan is here. Welcome. He says, do you back test or do you back adjust your daily chart? I assume you're talking about when the contracts roll over. And the answer is no, I do not. So I leave all my levels where they were in whatever contract was trading at that particular time. The way I define my daily ranges, I separate them between regular trading hours and overnight. So the overnight starts at 4 p.m. and then it ends at 9:30 a.m. the next day, and the regular trading hours is 9:30 a.m. to 4 p.m. And that differentiation is very important for understanding things like, where is the overnight high, right? Where is the overnight low? Where was yesterday's low? So those numbers are very specific. Ship's in the house. Good to see you. Ken says Q, please. Yeah, let's do the Q. The NQ has been much more difficult to read than the ES last week. So we talked about how one of the main reasons we can stay bullish on the ES is that we continue to make higher lows on the daily. I mean, we just keep doing it. Well, not on the NQ. Not on the NQ. Things are very, very different. Okay, so we had that big move, same thing as the ES, lots of short covering, lots of FOMO buying, and they were able to keep that momentum going the next day. But the day after that, they made lower lows. Okay, so that was a signal the market was running out of steam. It got one more push, making a new all-time high, and now we're one time framing lower on the daily. So this is where it's going to get a little bit complicated. On a daily basis, the NQ is actually trending down. However, I still just see it as balance, like a larger balance on sort of a weekly time frame. Okay? So I'm not as bearish as you might think. Maybe all they needed was those 3 days. Maybe this was enough of a pullback that now they can turn around and head higher. Okay, so any other time, I would just be straight up bearish on the Q this morning. I'd be like, we're one time framing lower. We're spending time and bringing in volume at lower prices. This thing's going down, but not today. I kind of see it the same as the ES. It's really probably more likely it's just going to chop. And I actually feel a little bit more bullish than I feel bearish. But let's talk about some specific levels and see where my mind would change. Yeah. Okay. So if you're looking at how the overnight tried to defend this area here around 17,480. Okay. So that was on Thursday night. The market worked very, very hard to defend that level. And then the next day, the Q just kind of bounced around up here above it. Okay. Well, now over the weekend, what did they do? Poked down there again. Right. But what happened this time? They didn't have to work so hard. They didn't have to spend so much time and bring in so much volume down there. Look at how thin it is. Very little time, very little volume. So this time around, as soon as they poked down there, the buyers instantly stepped in. So that tells me that that is very good, strong support. So I would say I'm pretty much neutral anywhere above, let's say 17,490. Okay, assuming it could just chop and go sideways. But if we start to push below there and start to get some new selling, then I'm bearish for that larger pullback. Okay. And for the highs, I would say just a little bit below the overnight high right here. That's my deal or no deal level for continuation higher. So you've got support in here. You've got resistance in here. In between those two, it's a chop zone. Too hard to know which way it's going to break, and they are likely to go up and down and up and down and up and down and up and down and drive you as mad as they can before they finally break. But if they poke above that overnight high and they start to find support, I would look to test yesterday's high, Friday's high, which is around 17,632. Okay? If they get above there, it's bullish as can be. And if they get below this area around 81 and get new selling, that is just bearish for a larger pullback. And I would literally say it's like 30, 30, 30. 30% chance we just go sideways inside that chop zone all day. 30% chance we go higher. 30% chance we go lower. We really will just have to wait and see. Yeah, it's not giving us anything here with any kind of edge. So again, let's watch what happens when the market opens. Where does it find support? Where does it find resistance? What kind of momentum do we have? That will give us a clue of what might come next. 3 minutes to market open. Here comes the liquidity. Here comes those day trading bots. They want to chop us up, chew us up, spit us out, but we won't fall for it. Chop zone. River Rock says, yo. Fred says, chop, 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 chop-oo. Yeah, I think we're going to get some chop, 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 chop-oo this morning. Good morning to Michael and Novo. Thanks, brother. Any other questions? 2 minutes till the market open. Nothing else to talk about. Anything at all, let me know. Ooh, I can plug my workshop real quick. So starting next Monday, 1 week from today, I'm teaching a live workshop. That workshop will teach you everything you need to know to be a trader. Okay? It's going to teach you how to read the auction process. It's going to teach you how to hone your intuition, improve your skills in trading, deepen your self-understanding, which is the most important thing, manage your risk, think in probabilities, and understand when to do business in the market and when not to. So this is an all-encompassing course. It's got everything you need from beginning to end. Whether you're brand new to trading or you've been trading for 20 years, I guarantee you will learn something at some point in this course. I have had many, many students who have taken courses from all sorts of people, and they all say mine is the most in-depth and it covers the largest range of things. For me in my own journey as a trader, I foolishly believed for a long time I just had to learn how to read a chart. I just had to learn how to understand what the market is doing, and then I'd make money. Easy peasy lemon squeezy for the rest of my life. But then I found out, oh no, it's not quite that simple. That there are all sorts of factors that play into it that have to do with your own human psychology. You can be a genius at reading a chart, but still take a trade you shouldn't take for emotional reasons. And so I've gone in depth to solve all those problems and give traders every tool that they need in order to learn and grow and develop over time. So if you're interested in taking that course, head to marketsandmind.com. It starts next Monday. 2 weeks. All right, so the market is open. We have opened inside the previous day's range, inside the previous day's value area, and wouldn't you know, we opened right at the same opening price. That's 3 days in a row, folks. Opening price on Thursday. Opening price on Friday. Opening price on Monday. Ladies and gentlemen, may I introduce to you a market imbalance. All of this is the market going nowhere. It is just getting traders long to squeeze them, getting them short to squeeze them, getting them long, getting them short, getting them long, getting them short, and just chewing them up. The highest probability is we're going to get more of that today. It's a chop zone. Let's watch them chop it up. I'm talking about a chop zone, baby. They'll chop it. Okay, so as you can see, these levels I've got pointed out, I've got support around 49.12 and around 49.04, and then resistance just above the opening price here around 49.21, and again at around 49.25. Okay, so what I'm interested to know is what happens when the market gets to those levels. Do we just get smacked down at the very first resistance, or are we able to get above the overnight high? A smackdown would mean more chop. Getting above the overnight high would mean maybe we're going to go higher. If we get smacked down on the second resistance at 49.24 and then head back into the overnight range, more chop. If we get smacked down there and then bring in buyers and we just start to spend time and bring in volume up there, well, then I assume we're going higher. Same thing to the downside. If we bounce off the very first support, well, it's going to be more chop, more grind. If we're able to get down there below yesterday's low, then maybe it could go lower, and we'll have to see what happens. But in between the support and resistance, it is likely to just chop. Speaking of which, pushing into the first resistance now. Okay, no resistance yet. That is a little bit less bearish to see. I would not say bullish, but less bearish. Okay, so we were able to poke up and take out this little node of liquidity that was up here. Those orders did fill. We took out some stops as well. So that's a little bit bullish to see. That increases the odds. We're going to poke above the overnight high, which we're doing right now. And then we find out what happens up here at the overnight high. Do we instantly run out of time and volume and turn around and head back down? Or can we start to hang out up here and turn that overnight high into support? Let's see what happens. Kyle says, I joined the Piratetraders brigade last week and also bought the e-course. I was wondering, where do we get the TPO chart like yours to follow along with the same thing you have? So the market profile software I use is from a company called Window Trader. It is the most expensive option that's out there. So I don't necessarily feel like people have to have Window Trader. It's just the one with the most bells and whistles. You do have to have Bookmap. because it's the only one that has, the heat map and the only one that has the stops and icebergs indicator. So like you got to go with Bookmap. But with Window Trader, you don't have to have this particular type. You just need market profile software. So that is software that shows you the TPOs, that are the letters that show you how much time the market spends in a certain area and the amount of volume that the market brings in a certain area. So just Google, whatever brokerage you use, Google them and the words market profile software and just see what's available to you. And that's probably fine. If you do want to use Window Trader specifically, once you sign up for it, just shoot me an email at ahoy@piratetraders.io and I'll send you my template. So you can literally just open it up and it'll look exactly the same as mine. But I would also say if you're going to get Window Trader, half the fun of it is that you can make it look any way you want. You have complete control. So you might play around and see what you like. Okay, so the market just turned around exactly to a tick at the week L period high from yesterday. That is choppy to see. That is telling us that it wasn't real buyers up there doing business. It was a computer. It was just a bot, just a day trading bot. So that tells us two things. One, the chop is likely to continue. And two, we are almost certainly going to come back for that high at some point today. That is a very weak high. Charles, if you're saying we're coming back for the high, shouldn't I be a buyer? It's a slightly better probability now, but it's not a guarantee. Pulling back into that overnight range means it could turn around and head lower. So I would wait for that support above the overnight high before I would become a buyer. Even if there's a magnet tugging on price. GH says, do you consider the red high liquidity areas as resistance? No. So when it comes to liquidity, I don't assume anything, right? My assumption of resistance here is about this node of volume and time from Friday. I know it's very subtle to see, but that was where the market, it was trying to go higher. It failed, started coming back down. So that's like a really important area right there. That is why I'm calling for resistance there, not because there's some liquidity. What I'm paying attention to for the liquidity is what happens when we get there. Do they actually let the liquidity fill like they did up here? Or does it spoof? Is it like right as the market is getting up there, it just poof, it just disappears? That's the important information. If it poof disappears, well, then the market's going to just go whoosh right through it or whoosh right back down. But if it holds, it will likely be resistance for a second, but it would be bullish because once we're through it, we're through it. So the liquidity, I don't assume anything about because it's commonly just spoofed. The thing I use for support and resistance is where the market actually did business or did not do business in the past. Tom Gunn says, TradingView has TPO for premium subscribers. I'm going to have to go check that out. I've been waiting for them to do it for years. Is it any good? Good morning to Percy. Novo says it's going down to the opening low if it's computer. Yeah, I don't know specifically. These day trading bots that reverse everything on those exact levels over and over. I mean, they do it. Like, it's every high and low now is a computer reversing it. It's hard to know what their exact plan is, but I just know it means there's a higher probability we'll come back for it eventually. Don't know when, but it wasn't real sellers. It was just a bot. All right, well, as of now, the market is finding support at the halfback, 49.19. That is a little bit bullish to see. It increases the odds that they're going to try to break out of this chop zone to the upside. So I would describe myself as mildly bullish as long as we're above that halfback. And since it's just a tick above the opening price, I would say above the opening price. So if the buyers can hold the market above this opening price right here, they are likely to poke up and test the resistance around 24. If they fail and pull back through the opening price, that will likely lead to a little bit of a pullback as you'll squeeze any buyers that are buying this support right now. So this is the market's chance to break out of the chop zone. Can they hold it above the opening price? Let's see. Chi-Town says it's early days for TradingView's TPO. It's pretty limited, but it's a step in the right direction. Good to hear. Yeah, I'll check it out and I'll send them an email. Let's pop over and see what the Q is up to so far this morning. Okay, same exact thing. It's trying to build up momentum to break out of this chop zone. I would say it's right at a chop zone high right now. So NQ, can they hold 17,558? That is the halfback. If they can stay above there, they are likely to test that overnight high at 17,591. If they pull back through the halfback, then it's just going to be more chop. Let's see what happens. Can they Hold it. Nope. All right, passing back through the opening price means more chop. Passing back through the opening price makes this a look above and fail of the overnight high, which means we just don't have the buyers to get above the overnight high yet. So we are likely to need to pull back with price, looking for those buyers at lower levels. I am looking for support around 49.12. They had their chance and they just couldn't hold it. More chop. Chi-Town says, we currently can't break out the TPOs into individual columns, but it came out in October, and it should have lots of development this year. They originally brought it out to the top 2 levels of subscriptions, but then pulled it from the lower and made it only available to premium. Yeah, that probably means they ran into a bunch of technical issues, and they wanted to limit the number of people using it. But that's good. They're working on it. So now the question that we're asking ourselves, as always in a chop zone, they failed to break higher. So will they now turn previous support into resistance? So this little node right here around 49.21 was acting as support, trying to hold the market up. Does it now become resistance to smack the market back down? So all we can do in the chop zone is ask what comes next and wait for more information. DNK says Apple is down 1%, keeping the market down. Could be. I would say the FOMC has a much bigger effect than Apple. More like just no one wants to do business. Boy, this is exciting. Okay, buyers taking control once again. They did not turn that node into resistance. So that increases the odds that we're going to poke up and test 49.23, as it is very, very weak. But I am not bullish, because my feeling now is that they're literally just poking up there to repair that weak reference, and then they're going to come right back down. So I will need to see them make the repair and then hold that support once again before I'd be willing to take a trade. Attempt to break out of the chop zone, numero dos. But Charles, what about short covering? What if we poke up there and all of a sudden the shorts start to cover? Still wouldn't get me bullish. Got to see the real buying at that overnight high before I can trust it. Because we are just set up for chop. We are set up to whipsaw. That is to convince people to go long right now so that when they come back down, they can just wipe them all out. Scooball in the house. What up, Scoob? Kyle says, what data provider am I using for Window Trader? I'm using IQ. IQ feed. Boy, this is the tightest range ever. It's like a 2-point range. All right, here we go again. Can they turn the half back into support? Can they repair the week high? Ticks are telling us that the momentum that is beginning to build is more buyers than sellers, but the Bookmap is telling us it's bot shenanigans. Caution for both sides. Okay, so now we just took that weak high and we turned it into a poor high. What's the difference? Well, often when the market creates a poor high, it first pushes away from the poor high to find support, and then it comes back and takes it out. So this is just another sign of chop. They are not going to make it easy this morning. So once again, can they hold 49.19? If they do, they should be able to take out that high this time. Let's see what happens. Well, Charles, what else is Market Profile telling you? There's so many little letters and colors and things. There must be some kind of an edge beyond could hold half back, could repair high. No, there is not. And that's the important thing. So far, we are still inside yesterday's range. We are still inside yesterday's value area, which means we are really just grinding sideways, just like we did on Friday. It's just more of the same. Even if you're feeling like, oh my God, I got to be bullish, the market's got to go so high. No, it doesn't. It really doesn't. We are still inside the previous day's range. We are still inside the previous day's value area. All of this that we're seeing is just short-term day trading bots. Nothing has fundamentally changed about the market. So for now, it's still just chop. Well, what would change your mind, Charles? What would make you think it's not chop anymore? Well, if price can get above yesterday's high, it's definitely not chop anymore. It's momentum up. or if we can spend enough time grinding around in the upper end of yesterday's range, that we can move this little blue box, which is what we call the value area. It represents 70% of the day's trade. If we can get that value area overlapping to higher, well, then maybe I'd see some real momentum. But to me, guys, I think we're set up for an entire day of going sideways, at least as of now, because there's just no real momentum here. The first clue that we had that it was going to be a day where the market does nothing but go sideways was the fact that we opened almost exactly at Friday's opening price. So nothing's changed since Friday. So we probably do the same thing as Friday. Push up, run out of steam, push down, run out of steam, push up, push down, push up, push down. It's going to be a choppy one. So if you're looking to be a buyer, first you want to see the market repair this poor high that we've just created right here around 49.23. So you want to see the market push at least a point above there. Then you want to see it come back down, and you want to wait until visually you are seeing on the chart that this overnight high is holding a support. Only then do you become a buyer in this market, because I just think we're going to whipsaw all day. So I would encourage caution for everyone. With that, unfortunately, I must say goodbye to the wonderful Bookmap community and head on over to hang out with the pirates, with the scallywags in the Piratetraders brigade. And we'll just hang out and watch the chop there. I mean, it's all we can do. It's all we can do. Scooball says, the daily looks like a new balance above the previous high. I would call it pinned more than balance area, but yes. Overnight low tested, balance area low. Now it's going to balance area high. I disagree. Not that that's impossible, right? What he's talking about is maybe this is like a new little balance area right here. And that because the overnight low came down and tested the low, the natural move is to slingshot to the other side. That could absolutely be the case, but I personally wouldn't choose to take trades in that. I would just need to see some confirmation. Like I said, I'd need to see those buyers hold that overnight high and then look for the bigger move. And if I get long and it doesn't get the bigger move and it pulls back down, that's fine. I get stopped down, no big deal. But to me, that's a better way to play it than to play this as balance. But there's nothing wrong with that. If it works for you, you should absolutely do it. Okay, so we just had our second look above and fail of the overnight high. Once again, pulling through the opening price tells us we do not have the buyers in here to keep this thing going, and increases the odds we'll need to pull down to the 49.12 level. But it's choppy, so it doesn't have to happen in a straight line. Michael says, what time frame do you like to watch on the Bookmap? That's a great question. It's not really about time frame. So with Bookmap, it just depends how much you're zoomed in. So like you could zoom out, and now I'm looking at the last, half an hour, right? Or I could zoom way in, and I can literally be looking at a fraction of a second if I want. Right? So to me, there's no exact amount I am zoomed in or zoomed out at any particular moment. It's about wanting to know where the liquidity is. So if I'm like way zoomed in like this, and I'm asking myself, is there liquidity up at, 49.28? I got to zoom out a bit to see, is there something up there? So it's really more about just trying to see, where are these bright colors? Where is the market putting the orders? And I just zoom in or out as much as I need to see what I'm looking for. All right. With that, I will say goodbye, farewell, au revoir, and wish you all the best. Like I said, to me, it's still a chop zone. They can get bullish if they can, repair the poor high and turn the overnight high into support. But other than that, I think we're just going to grind and grind and grind inside yesterday's range and drive all the day traders mad. And they might do it till Wednesday. So enjoy. Happy trading, everyone. To the members of the brigade, let's set sail. And everyone else, we'll see you next Monday. Bye.